Hi guys, so today we're going to talk about something that I feel like is very important when it comes to trading. And everything I pretty much put out is very important to trading, but as we continue to go further and further into the course, I just want to keep telling you that, watch the beginning so you can understand now, right? We've made it this far. I think we're on 12. We made it this far, and overall, I want to explain a market decision. So basically, you find a setup and you need to make the decision if you're going to take the trade or execute the trade. What should you be looking for? The mindset, basically, of just finding your trades and seeing what you see in the markets and being able to determine if the trade is valid or not. So today I did a breakdown on Telegram. So I recently just did a breakdown on Telegram and look at price. I want to show you something, right? So price was sitting at 195, and then it bought up recently all the way up to 203, right? But that doesn't discourage me or anything. So if we go here on a 1 hour time frame, that's why I got this, right? So it was sitting on that level of support. Boom, this level of support. If we go back to the 4 hour, you can see what I'm talking about. So that same level of support here, sitting on that level, and then it bought off of that level, which is cool. In my head, I'm thinking to myself, well, I'm like, okay, well, I see that price has a new low in the market. Is the correction still going? Because initially we don't have any bearish signs yet. We have price come up to 211 and then have a rejection back down to 193. But price pushed up, but it didn't break over 211, so it's not bullish. It can be considered bullish on the 1 hour time frame because price is above those swing highs. So as you can see here, we have price above these swing highs. That indication above here, price corrected back down to these levels. It didn't break the level that it bought off of. So as you can see here, price bought, price came here, it sold. This is the lowest level it sold, and then it bought off that level, right? So we have a high, higher low, higher high, another higher low. This could be a potential move for a higher high. Now, this is why this video is very important because you can have things like this. You can have things like this that confuses you on which way the market is going to go. So you'll get into a buy trade now, right? You'll get into a buy trade now, and then later on, price will end up selling, right? So what I want to advise you on, it's not like I said, it's not always going to work, but it's best to be patient. I know it's going to be super hard to do that, but it's best to be patient and wait for extra confirmations. So for this 1 hour time frame, I'm going to show you both time frames and what you should be looking for. So with this 1 hour time frame, if you're confused if price is going to go bearish or bullish, ooh, excuse me. I feel like I I feel like I yawn in every video we make. But yeah, I probably just need some blue light glasses to be honest, bro. It'd be making me a little tired. But look, with the 1 hour time frame, look at it already. You would have been stopped out most likely. Some of you guys make super small stop losses. But with this, you need to basically see more bullish structure, more bullish confirmation. So how are you going to do that, right? So for example, you see how price bought off this level. You see how price bought off this level right here? This is a signs that bulls are here, right? Price can do whatever it wants whenever it's here, right? So this doesn't affect us if we're thinking from the 1 hour time frame perspective. 4 hour is always going to be stronger than the 1 hour. 1 hour is always going to be stronger than 30 minute. 30 minutes going to be stronger, yada yada. So overall, I feel like the 4 hour is still going to overpower the 1 hour. We're just waiting for the 4 hour to play out. But just for you to overall get a perspective. If you ever have a trade where it's contradicting itself on the higher time frames, sometimes the 1 hour can build into that 4 hour. So the 4 hour might look bearish right now, but the 1 hour is building that up. So what you would want to see is price have some rejections to the downside and start building higher highs and higher lows. So then from the 1 hour, we could go to the 15-minute time frame, right? So from this 15-minute time frame, price already had touched there. Wow. Price had already touched in that area on 109 where sellers are at here. That's pretty interesting. Maybe I'll take all this back. That is pretty interesting. But let me just continue with it, right? So if you think the 1 hour is going to go bullish, you need the 15-minute time frame to remain the same. Now, once again, I'm big on whichever higher time frame is bigger. So if the 4 hour has more bearish structure and it's clear to see, I'll go with that. If the 1 hour has better structure than all of these, I will go with the 1 hour. But in this case, 15-minute time frame, we can see that price is building higher highs and higher lows as we have here, as we have here, and then as we have here, right? And I'm big on marking the body closes because I feel like those are closed deals. Wicks are more of like, hey, we've been here, but we didn't successfully get up to the level that we wanted to, so we're closing out at this level. So I'm big on body closes um, when it comes to marking things out. But with this, with the 15-minute time frame building up bullish structure, and we're still above. Oops, wrong one. And we're still above swing highs that we had. So this gray area is where that initial breakout came from. This would still look to consider go bullish above 102 back to 110, 111 because of the 15-minute time frame is building bullish structure, right? And that's tagging along with the 1 hour time frame. So that's how you would see it if you was looking for buys on the 1 hour time frame. Now, if you was looking for sales, your market decision between that will always be under it would be the same thing. You would basically take structure where if you're seeing sales, you want price to break a level where it shows you price can go bearish or bullish. In this case, bearish, right? So we do not trade until price breaks below a level of where bears can come in control. Sorry. So in order for you to sell, let's put it this way. Let's make a rule, right? In order for you to buy, it has to break above a swing high. I feel like we made these rules before. In order for you to sell, it has to break below a swing low. So in this case, right? In this case, if we're looking at only strictly the 4 hour time frame, if we're only looking at the strictly 4 hour time frame, price will be considered bullish above that level, right? It still matches with the 1 hour time frame. So even if we go here, right here where price originally broke out on the 4 hour, we have this push up. So this bullish momentum above this level, a correction, stayed strong, price above this level, bullish, right? If price breaks that level of support, it will match that other confluence with that support level that was here where buyers were once at. So as you can see, buyers were once at this level. Price broke under that level, which means anything under only this price point. Remember, only under the price point. It's not bearish in general until it breaks above or below a level. Some of you guys will see an indication, and you will only think the trend is supposed to be that. Just because you have an indication in a level doesn't mean the whole trend is that yet. It only becomes the trend when price is under this level. So we only say that price is bearish when it's under 190, 189, right? We only say price is bearish only under that level. So anytime it's above this level still, price can do whatever. It's still still bullish above that level, right? It's still bullish when it's above 194, 191. Price is still bullish. The moment it breaks 190, it broken all the bullish signs. So every sign that we got that price is bullish above this level, these pushes off this level, that will all go out the window once price breaks 189. I mean, yeah, 189, right? So with that being said, your market decision has to get better when it comes to looking at market structure. Market structure is going to save you a lot, especially when you're looking at different time frames. So I don't stick to one time frame. I trade on most of the higher time frames, so 4 hour, 1 hour, and I swap through. I go look, see what I can find. Okay, the 1 hour looks pretty good to be bullish above 199. Anything above 199 is most likely going to go to 209, right? the chances of that are pretty high because we had that same bullish momentum before. That's all we're doing. We're looking for, so the best way to explain it is we're finding our swing lows and our swing highs. We're taking that swing high that we had. We're looking for that initial breakout and correction. Once we have that indication and correction, so once we have the breakout and the correction, everything else is just waiting for price to re-break back above that level again. That's all the market structure and price action that we're using, is we're waiting for price to re-break above that level again. So in this case, price could go bullish because we've seen this break before and we've seen the causes of it, right? We've seen the causes of this break. So I'm gonna go ahead and put this here, right? So we've seen the causes of this. So we know price is gonna try to make its way back up and try to do the same thing because above this level is letting us know that sellers have no control. So as you can see, when I say sellers have no control, this basically means that buyers are gonna push as much as free will as possible up into this level. It's like driving down the highway. If there's no cars on the road, if there's nobody to stop you on the road, there's no cars in the way, no traffic. You're going to punch the gas as far as you can, literally as far as you can. And you're going to speed until you get to a point where there's cars in the way and traffic. So it's the same way. Price is bullish. The next level of sellers is at 211, right? So bulls are going to maximize and use all the speed they can until they get to that next level of sellers. And then that's when price starts to slow down. But if buyers maneuver through the traffic, so if they get up here and they maneuver through the traffic, they move through the traffic and happen to get another free opportunity to push up higher, that's what buyers are going to do. And that's what a trend is going to do. If price feels like it still has some more wiggle room or it still has some more gas left in the tank to push at maximum speed, it's going to do so. You cannot stop. Put it this way. You could be the guy that's slow Nancy on the road, going the speed limit, average speed limit. But if you see a Lamborghini speeding down the highway, you got to move out the way. So if sellers see that buyers are coming in full strength, they got to move out the way. And they're going to move out the way and let buyers continue to keep going until they run out of gas. Right? So it's pretty much everything is the same way when it comes to trends and market decisions, making decisions in the market and understanding everything. All I'm doing is simply taking what the market is showing. So I'm looking at levels and I'm saying, hey, price was buying from this level. So we're going to mark this level first because it bought from this level, pushed all the way up into this level. Why did it stop here? That's what I would question myself. Why did it stop here? And then price sells. And then when it keeps going, punching the gas, punching the gas, punching the gas, and then it stops. It's like, no, I don't want to go any further now. Why does it stop here? Oh, because there's more buyers picking up here. And then when I see this, I'll look over and I'll try to see if there's anything that it broke out of before. Where did this come from? So where did this low was coming from? Oh, this low came from when price pushed all the way up and got to this point. So then that's very interesting because then I use this. And now I can see above this level, price is repeating the same thing. So I'm going to drag this over and I'm going to look for price to repeat the same thing. Same way with that bearish momentum, right? I'm showing you what's going on now. And maybe by the time you look at this video, it might be at 210, right? Or it might be going for that sell. I still believe in the higher time frame, but that 1 hour time frame can definitely build into the 4 hour time frame. So the 4 hour could be at a shift right now, right? Right? The 4 hour could be at a shift. What you solely go based off of is just the market structure alone. So 1 hour time frame is above there, 4 hour time frame is above there. We have higher lows. Cool, right? But we still have this new low, which is why you can also think price could be bearish. But once again, price can be bearish under 189. That's why there's an alert here. There's no trade set, but there's an alert here because under this level, it is seen that price can go from here to here. So from here to here is what we'll be targeting. Same way with this. I mean, I didn't see this one. I'm just now seeing it because it's making the move and pushing up a little bit. So above here, when we started the video, price was here, now it's here. Um, but yeah, this is the same thing that I would be looking for just on the sell side. So that would be the same thing. We have that indication, price corrected in the market, and then we're looking for price to sell back down to these lows, right? So it'll be the same thing. No matter what you do, the price action and market structure will be the same thing. The setup will still be the same thing, right? So with all that being said, back on the 4 hour, what we would want to see is basically price build lower highs and then break that level of support when over under 189 back down to 174, or price, since it did break above this level, and we if we scale in we can see, notice how price here didn't want to go anywhere above this level. It was rejecting, struggling to get above 198, and then it finally broke out of 198, went up to 209. Once it got to 209, sellers came into the market and they said, let's go for a correction. Let's push price back down for a bit. Boom, they pushed price down to 194. 193 is the lowest, or 191 is the lowest. So no breaking of the previous one because 190 was the last low. And then now we have 192, 191 as the low currently. And now price is looking to push with that same momentum back to 209. So all in all, we're making a market decision based off of the reactions that we've previously had before. Now, like once again, I'm saying I'm super bearish on crypto because we have the new lows. Anything else I would just look as a correction for me. But if price continues to break above this, then my bias change. And why is that? Why does my bias change only when price is above this level, right? Because now I have consistency in higher highs and higher lows. So if I'm looking at the higher time frame, it's okay to miss out one trade. It's okay for me to miss out one trade. I feel comfortable trading out, missing this one and getting extra confirmation on the next one. Because the same thing is going to happen. Price still needs to make a higher high. Price still needs to make a higher low. Price still needs to make a higher high if it's going to go on a trend. Higher low, higher high. Still needs to do all that. So I'm going to see it regardless. It's okay to miss one because you can catch the rest if the higher time frame is building that trend, right? Over here, right? So that buy, it was like right above this level, right? Somewhere over here on the daily time frame, it was this. We had that indication. Price didn't break above it this time, broke above it the second time. Price push, right? Corrected. All this market happened. This is on the daily time frame, but I'm looking at it on the 4 hour. You can go back and rewatch it. But above this level, we was looking for price to go bullish. That was higher high, higher low, higher high, higher low, higher high, respected that support level, and still continue to push, right? There's multiple signs here that shows price was going to go bullish before it got back above this level. You could have took advantage of it. And I'm just giving you an example of how price can build higher highs, or even like looking at not recent gold. Recent gold is so bad. Give you some better market structure, right? Let's go. Let's just say here, right? Price goes on a small correction, and then we start seeing this being formed, right? We see a level of support. Price respects that. Obviously, we see prices respecting that, even over here, respects all that. And then we have high here. Price broke above indication, corrected back down to here. Price came back above that level again. So now we have highs, correction, still didn't break. So that's also one thing too as well. Don't get scared when price is correcting. As long as price is not breaking overall structure, you're 100% okay. I'm gonna go ahead and come back here so it's a little bit simple for you, right? Look at price. Higher, oh, we have a low, higher high, higher low, higher high, higher low, equal low. Tries to make a higher high, fails to do so, but makes that higher low to let you give that extra like confidence, that confirmation. When if price doesn't give you that higher high, but it gives you that higher low, still stay in the game. Your stop loss is supposed to be under this level anyways, right? Price still maintains. We still have multiple opportunities, multiple signs before price makes that push. So we have a push, higher high. Then it needs a higher low back at that same level. There's ways to capitalize off of everything. Then we get that, more momentum. What does price do? Gives us a full-blown correction. Once a full-blown is correct, what can we do from there? Continue to do the same thing because we're going to have the higher high, price makes the higher low. The last level that we pushed off of was here. And the reason why I'm saying that this is the last level we pushed off of is because look at this. Price stepped on the gas, got to a level, had a reaction. I want you guys to take the time today to look at your swing highs and swing lows compared to the way that I'm marking my swing highs and swing lows, right? And not saying that mines are better or just like the best, but I want you guys to notice how I'm not going in the charts and I'm not marking up this. I'm not marking up this. I'm not marking up small things like this. All I'm doing is going to the chart and it's not me trying to make it like picky or anything. I'm just looking at the levels. Boom, I see that price got to this point, made a huge change in movement, huge change in direction. Came to this point, shot up to 3,750. It went from 719 all the way to 750 in this one move. Hmm, buyers are strong here. Price came here once, 790 or 749, shot down all the way to 730. Once it did that, shot from 730 all the way back up to 760. These are movements where price is making decisions based off how many buyers and sellers are in control. Here you wouldn't be marking this. You wouldn't be marking this. You can just take note that hey, price is struggling to break above uh 751. Price is struggling to break above 751. Why? Because previous market at 751 shot down to 731, right? We can take note of this. Price pushes up, gets to 757, shoots down a little bit, back down to 739. These are things we could take account of, but it's all, it's not the best because this is the main level that we have, which is at uh 760. 760 is what we want to see. So we have 750, 760. We know that these are both highs in the market. We know that 730, 732 is a support level. So as you can see, support level on 732. So we already have our highs and lows. We need price to break above 750 to go bullish to 760, right? Price above 750 goes bullish to 759 the first time, retraces a little bit to get more momentum back above 750. Where does it go? 760 with another push. Now it goes from that 760 all the way to 784. From 783, 784, it goes back down to 760. So now we know sellers are in control of the market or sellers are pushing price or trying to push price back to those 760 levels. That's okay. We have buyers at this level. So this will be our indication, correction, and then price once again pushes back above this level and gives us more high. So all of this is just me showing you that just looking at market structure alone can save you from a lot of market decisions and help you make the right decisions when it comes to pretty much trading anything, right? You can literally trade anything at this point, right? So look at this. Even though I feel like price is going to be bearish, but even if it doesn't go bearish, I will trade the buys. if the Solana buys look way better than BTC buys. But anyways, I'm gonna show you price. Sells under this level, cool. I see price gets to this level. Hmm. I see a reaction. Not too much, so I'm gonna just use this one. Everything's already played out, this will be my analysis now. For what's going on here, I'll just look over here to see what's going on, right? I see that price got to this level, pushed up from here. So obviously we can see that there's multiple times where price comes here, boom, price comes here, price comes here. I see there's multiple times where price comes to this 400 or 110. It comes to this 110 level, 110.4. And it kind of has some buys up, nothing crazy, no crazy momentums. I see that these levels are getting lower and lower. Not a crazy sign of anything. I see that price really doesn't want to go above 1,000 or 112,000. Pushes down, continues to push down, tries to break. It doesn't want to break. So now I'm seeing in my head, I'm thinking like, okay, and once again, I'm working off the 1 hour time frame, right? I'm looking at all this and I'm like, okay, price is not willing to break yet. This is cool. It's okay. All right, not really seeing much of a trend out of here. It looks like price is slowing down. The reason why I think it's slowing down is because price is only stopping in this 110 area to 109, right? Only stopping in this area here, right? And we have that huge rejection back down. So overall, I'm just seeing prices not trying to break this 110 level overall. Then we have a push above 110. Price tries to make a push, tries to make a run for it, but it gets stopped for a few hours at what number is this? 112 or 111, right? Stops, it stalls for a bit, and then it actually breaks above 111. It goes from 111 all the way to 115. So this lets me know bulls can take control. If price goes above 112, it has potential to take itself to 116. So then I will take this and I'll just draw it across. And why would I draw it across, right? Why would I do that? Because here we're looking for the same momentum with the volume. Price got up to a level. Price gets up to a level. So we could look for that same momentum because it's all just buyers and sellers. So if I know buyers have more control of the markets above this level, I might as well take the chance to see if it's going to repeat itself again. Now, there's obviously going to be some stipulations with this because you need a new high for price to chase. Price is normally chasing some type of high or low. Same way with like anybody in this world. We always chase a high. We're always chasing a high, and that doesn't mean drugs, guys. Calm down. It could be anything. You could be chasing your dreams. Your highest point in life is your dreams. You're always chasing something. So it's the same way with the market. It's always chasing some type of incentive, whether it's bullish or bearish, right? So with all this being said, since price is chasing this, why do I just feel like price is not recording me? I don't know why. Um, with all this being said, price has no new incentive to chase. So the likelihoods of this decision could be very less. The probability on this is very less when you have no new high to chase. Not saying it's not going to happen, but the probabilities are lower. So now when we get into more of the market decision, I'm just kind of laying out my mindset. It honestly, this is like I gotta put this in like 4 different videos because the way that you think about the charts is, I wouldn't say you're wrong. If you're unprofitable, I would say the way that you're thinking is incorrect, of course, because you're unprofitable. And this is not me saying, oh, well, I gotta be harsh on you. I gotta be harsh. You gotta be harsh on yourself, not too harsh, but to your comfort level. Well, no, you gotta be uncomfortable. You know what? Just fucking lock in. Anyways, you have to be very precise in the things that you're choosing and why do you think the market is going to go in the way that it's going to go. But there also has to be a new incentive. So if you ever seen So BTC is kind of like the Nasdaq, right? It's like US 30. It's kind of like, SPX 500. All those three stocks move off of pretty much each other. I'm pretty sure everything moves off of the S&P 500, because 500 stocks is more stocks than, you know, Nasdaq 100 stocks, or Dow Jones 30, or Dow Jones 30 stocks compared to 100 stocks compared to 500 stocks. So, same way with BTC, it's the biggest crypto in the game, the biggest. So then when you start looking at your other trades, so this is for the crypto traders right now, right? Start looking at the other things. You have to, okay, well, BTC doesn't really have like a new incentive. We have that drop, a correction, price push off the support because it didn't want to break anymore. But then this could still mean price is bearish because there's no new high, there's no new incentive. Price stalled here, it stopped. They came up, came down for a little bit, came back up, didn't break. So now it's a no trade zone for BTC. And now that I'm seeing this would mean that Solana is going to be at a halt too until BTC makes some movements, right? Until BTC makes some type of movements. Now, this is not the same with correlation of pairs, like, oh, EU is the opposite of such and such. That's not what I'm saying. And I don't trade Forex pairs, so like the way y'all be trying to confluence or I mean correlate different pairs is like I don't understand, but it is. I mean, to each his own. Because like some things will move this. Some charts will look the same. Some charts probably look like BTC. Some charts probably look like gold. Does it mean they're doing the exact same thing? Does it mean what's driving gold is driving whatever you're thinking? That's not always the case. But when it comes to market decision, you have to take these things into accountability. So taking the fact that if you're trading NASDAQ, right? So if we're trading NASDAQ and we're looking at NASDAQ and we're seeing NASDAQ go up, then we got to go look at something else. We got to go look at S&P 500. So this will be SPX and Forex or CFD, right? It'll look the same. You'll still see the same, right? But there will be moments where price won't look the same. And you have to make decisions based off of, okay, if the S&P, let's say if the S&P was going down, then we have to think like, I should take that with a grain of salt when it comes to looking at the NASDAQ. Okay, let me make a decision based off that. And your decision most likely might be, you know what? Let me give the market a little bit of time, right? Let me give the market a little bit of time, see what happens. And I said this earlier when I was talking about Solana. Let me give the market a little bit of time to make a decision. It's okay if I miss out on one higher high, new high if it's a buy, or it's okay if I miss out on a lower low, right? It's okay to miss something so you can get more information. This is what keeps me here, right? This is what keeps me here, right? This is what keeps me here. 98, because I'm picky about putting myself in the markets because the market is a very risky thing, risky, super risky. So when it comes to making decisions in the market, you have to be very, very careful at the market setup or the market structure, the price action that you're looking at, and making sure there's new incentives, new things to even get into the market. If there's nothing new that you can use, then if there's no new high. So for gold, for example, I'm gonna give you a prime example. Gold has a more higher probability of buying up to the new high because the gold has been chasing its own highs. So it has the potential to go to those new highs. Now, Sai, why are you not taking this trade? Yeah, I personally like my thoughts on gold for the people that's been asking. My thoughts on gold is like it's been a crazy squeeze. Um, Economically speaking, gold is not supposed to be this high this fast, but we're here. So, as a day trader, I would prefer. ah, It's kind of hard to explain the mindset. I'm gonna just kind of lay it out on you. I prefer not to trade gold at these all-time highs, especially with the amount of liquidity that's been put into gold in the recent weeks. Sometimes people make a lot of investments because that's what we're trading. We're trading based off of people investing into gold, putting money, basically liquid cash, liquid money is going into gold. And sometimes people, they get, I won't even say FOMO. People get scared or people just want to fit in with the money. So everybody starts liquidating and putting everything into this. It could be anything, crypto, it could be gold, anything. When people start having fear, they start buying everything that they feel like is valuable. During Corona, COVID-19, people was at the grocery store stacking up on tissues and stacking up on supplies because they was very scared that the items would be gone for life. They thought this was the end of the world. And then after that, there was a whole market reset after that. Like just a complete market reset. Price was at all-time highs. I still remember this. Price was reaching all-time highs right before COVID came out, and the whole market just reset itself, completely dumped, a lot of money lost, a lot of money gained. Most entrepreneurs were made during that time, ever. Most entrepreneurs in the world was made in that time. So when it comes to these things, I think in my head, I'm like, okay. I see gold. It's fun to trade. It's fun. You make money no matter what, right? No matter what I say, no matter what, the politics say, the news say, papers say, Twitter say, Instagram. No matter what we say, trading is fun. You can still make money regardless. But the way that I trade is more of on a like if I was an investor, I would be a good investor, right? I you're classify yourself as a trader because you get in and out of the markets. You're not in it to hold it. You get what I'm saying? So it's a little bit different. As a swing trader, you can kind of say I'm an investor, but it's a hit and miss. There's like debates about that because I'm in and out of the markets, and some people are investing into that actual asset. So some people are buying gold bars for $4,000 right now, right? So it's different, right? Well, not gold bars because I don't really know how the pricing works with that, but I'm pretty sure it's about like per grams or per ounce or something like that. However that works, I'm not an expertise in gold, so don't bash me on that one. But all in all, I would rather stay away from trading something at an all-time high because of the amount of liquidity that was put into the market at a fast rate. It looks great. Once again, it looks great to trade, but for me and my setups, I don't think it would be the best for me to put myself in a position where it is more liable of price having random spikes, random pushes out of nowhere due to the fact that one day somebody can be like, okay, like we invested a couple days ago and price went up 30% now, so let's like liquidate our position. If that makes sense. Because just these small moves, like somebody could have invested Friday on the 10th. It's the 14th now. Somebody could have put $4,000 or somebody could have bought gold for $4,000 and in less than 3 days, depending on how many shares, if they're trading the futures or if they're investing into it and however many bars they have, ounces, however it works, grams. Don't judge me, but they've made a lot of money just based in 3 days. So then they can liquidate their position or they can continue to hold, right? But you just don't know. That's the problem here. You don't know what an investor is going to do when price is at its all-time highs. right? Same way with BTC. BTC was just at its all-time high. And look how fast it came down. And I know there's going to be a lot of people that's going to be like, oh, because of the Trump tweet, because of the Trump tweet. And this is going back into market decision. Before Trump even tweeted anything, before he tweeted anything, there were signs that price was losing money, not even losing money. People were closing their trades. Remember, trading is simply buyers taking their trades to the sellers and sellers taking their trades to the buyers. So there's a bunch of buyers. All-time highs was at like 124, right? 124. So there's a bunch of people looking to sell at this level, right? There's a bunch of people looking to sell at this level, bunch of people, right? Price gets to this level. First time it touches this level, look, just watch the market itself. Look at the reactions price give you. This lets you know a lot. I need you to rethink how you look at things. Price gets up to this level, rejects. Why is that? Ask yourself, why is that? Because there's some heavy amount of sellers here that's is selling price, selling their BTC, right? Boom. First sell. Then buyers are like, nah, bro, we gotta keep pushing, keep pushing. Some people are getting in late, or some people are just now thinking that this is a small pullback and they get in for the next move. So then it pumps again. Now there's a new all-time high, and price gets to that new all-time high and has rejections. Sellers are here. People are selling now. People are starting to sell. Sellers push in, boom. Nah, bro, keep buying, keep buying, keep buying. Boom. Comes up again, but this is the same level of sellers. Boom. Sellers are like, no, bro. Boom. Then we get this break because now this time price sold, it sold more than it sold the last time, which should be a red flag if you're a buyer. This time it sold more than it sold the last time. It's the same way with like, let me give you an example. It's the same way with like, I don't know, just like a grocery store, right? If a product comes out, let's say a pair of glasses, right? Pair of glasses comes out on the market. Every prime example, matter of fact, prime example, right? Chrome hearts or clothing. A piece of clothing comes out, depending on the brand too as well. Piece of clothing comes out, it's only like 10 pairs, right? It's only 10 pairs. 10 pairs sells out, right? All the 10 pairs sells out. Now there's no more on the market, right? So now people are making fake ones. People are trying to make one. People are trying to get them. People are trying to buy them. They're in demand. Now it's in demand. So the value goes up, right? So let's say the jeans were they released here, went up in value, people were buying them, right? Then you start seeing fakes and you start seeing, people trying to copy it and this and that. So the value kind of goes, you know, it tanks a little bit due to the fact that people are diluting the market, but that's okay because anything you do in life, somebody's going to copy it, right? Anything you do in life, there's always going to be a real side and fake side of it. So then the market becomes, um, it's basically gaining value. There's a market pullback on those jeans or those piece of clothing. Market pullback, right? But that pullback is healthy, right? And then you have another surge, another 10 pair of pants drop, another surge, more people, this time at a higher price. People find more value in it because now there's another stock out. So people are more driven to try to get it this time, but they're going to get it at whatever cost. They don't care. They're going to get it at whatever cost they can get it. So then the market value drives up, crazy insane, right? All gone. So now it's all gone. No more in stock, no more in supply. So then there's more of a demand for it, but then that's when more and more fakes and more people are trying to, you know, get a hold of these. The market kind of slows down. Doesn't mean it's bad. It just slows down. The market slows down. People are still in demand for it, but the market slows down on it. Another drop comes out, boom, more prices, higher money, higher returns. This is even how you run a business, bro. There's going to be points where you make a plan. You have to make productions and make ads for it and stuff like there's going to be slow times, and then after that you do another drop, another release or something, and it booms. That booms. Sometimes some maybe not or whatever. Right? So to put this all into perspective, price gets to a certain level where there's so many pairs of these pants now or a pair of clothing where then some people lose the value of it because there's so many now, right? And essentially, what the market is going to do is that is going to be diluted. It's going to be diluted. There's going to be so many pairs of pants that it lost its value. So to reflect this all back into trading, price on gold or price on BTC crypto, it has a lot of value because there's a lot of momentum behind it, a lot of news behind it, a lot of hype behind it. And all this can then die out sometime. But there are signs. Back to market decision. You start to see these signs. So we know price is losing hype when it goes under the previous lower level that it was. So if price, when it slowed down the first time, it only got to 122. So here, price came down to this level, 122, bought up from 122 and made a new hype for itself, gained more popularity. It got to 125. And when it got to 125, kind of died for a little bit, slowed down. I wouldn't even say died, slowed down for a little bit. You know, everybody already has a pair, everybody has it already, or most people have it already, you know, whatever, whatever. Not attainable, it's not obtainable anymore. Then the market starts to die for it, and then we have a break. But this time it breaks below than the previous low that it had. So this is a sign that price could be actually losing its value on it. And now I'm going back to actual BTC, right? Below this level of support, we know anything under 122 is going to give us that same momentum. There's pieces in here where you can see price tries to go under 122, but it fails to do so, right? That's cool. We still have these lower highs. These are still signs. This is signs. If you ever feel like price is not going down, look at it if it's going up, because this is also a good sign too. If you're thinking sells under this gray area, which is what you're supposed to think, but price, let's say you got quote unquote faked out here, even though you're supposed to wait for that lower high. Let's say you got faked out here. Boom. That's okay because the previous high we had, the previous low level we sold from was here, or even here. Let's just say here, right? You had a level here of where it was holding support, came here, came up high, high, low. And I don't remember what I said earlier. I don't want to mark this because it doesn't really show a significant change in direction, but I'm pretty sure on the 1 hour it probably looks a lot different. But anyways, let's say we have this high, low, tries to come up, wicks out, closes here, closes lower than the previous one. Since it closes lower than the previous one, we have a break. This is when it really comes into play though, because this is the level that we made this high off of. One thing I need you to also remember is you want to go based off of, please write this down. Go based off of previous push. So basically what this means is if you mark a swing high, please just go back and see where that swing high was built from. Where did it push from? Because this is very important. Once you find this, you can make a decision under this level now. This is price where it pushed from. So this is where all this bullish momentum came from. So the moment price is under this level, that means market has no potential to be bullish. If price is under 1,000 or 122,000, where that bullish momentum came from, that means if it's under here, it lost that momentum it had right here. It lost that momentum. The moment it breaks, it lost that momentum every time price is only under here. So like I said in the beginning, if price is above that level, do not think price is going to be bearish. Wait for price to be under that level, and you have more higher probability under the level than you do above the level. So if price is up here in this area, do not say it's going to sell yet, or do not take a sell yet. You can say it could sell, but don't go for a sell. Don't try to get into a sell, right? But don't also try to not get into a buy. Why not get into a buy, Sai? Because price just made a new low. This buy is just reactions from price hitting that new low. So whenever price makes a new low, it's going to have some type of bullish reaction to show you that bulls are in control at this level. Bulls can take it up as high as they want, but they cannot break where the previous sellers were, right? So we're going to delete this. We're going to delete this. I'm going to delete this, right? I'm going to delete this too. And we're going to go back to this tool. So this is the highest point. We'll make this big for you, right? This is our highest point. Price sells down. This is our support, our low. Price has reactions, comes up to this. Honestly, you can look at it this way because of the 1 hour time frame. So if we go to the 1 hour, it'll look a little bit better for you guys. So that's what it'll look like. You see price came up to a certain level, dropped down, lower high, lower low, right? But let's just make it simple for you guys. Let me make it simple for you guys. Let me remove this. If we're looking at the 4 hour time frame, pay attention. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, broken. This is signs of a change. In order for us to say that price is going to go back bullish, it has to make a new higher high. Once again, I am okay with missing out on this higher high because then I have confirmation. Or the second scenario, price could come above here, stay above here. So stay above this level. So you see this higher high, even if price made this indication, if price stays above that level where it made the previous bullish momentum here, if price stays above that level and builds a higher high, it could build again, right? That's okay. There's some times where the market will actually liquidate more than what's possible or more than what we think. That's okay. There'll be times like that. But there's no reason you should get faked out because look at here. This is the time you're supposed to sell. If price doesn't give you that, if price doesn't go under that level and give you that, then you shouldn't be in that trade. This shouldn't be a sell. If you see price makes a high, rejects, goes to the low side, rejects, doesn't give you that lower high, doesn't give you any other bearish confirmation, rejects this level and pushes, you should be looking for those buys instead. But anyways, going based off previous push was here. It ended up being broken. This is signs that price is getting bearish. So then, as we see here, price builds up, but only comes to this level. So once again, look at how price gets to this level and it's having all types of crazy reactions, even before it got there. Even before. Having all types of different signs. Let me turn this up for you guys. Right? And even though we don't go crazy on the wicks, look at how all this rejection was here. Rejection, rejection, rejection. Super strong movement down with a red candle back under this level. So now we know sellers are in control at this point. Pushing price down, price comes under this level, has some small pushes down to this level, which is good. It was going good. Price came down even more. It came to that same level. So if we was using the body closes, it touched the target. Once it touched the target, buyers came into the market. Boom. Look, buyers come into the market. They try to push price up. I'm not sure in which way this went up at first. Let's go and look at this. Oh yeah, so look, price sold first, came to that level that it was looking for. So the same level where the buyers were sitting, it came down to that level, just like how you want. Price showed some signs of bulls taking control, right? That's cool. That's okay. Price didn't break above the highest point. So this is our highest point. We had a sell off. Price change structures, tried to correct. Once again, the higher time frame will always end up aligning overall. So what you're seeing on this time frame, on the 1 hour time frame, what you're seeing on here, you probably would have been scared. You probably been like, oh, bro, price is gonna go back bullish. But there was multiple signs on the higher time frame, 4 hour. So 1 hour is the higher time frame. 4 hour is stronger than the 1 hour. So once again, it goes back to what we're looking at overall on our other side, right? What I was talking about earlier. Make sure this is not dying. The 4 hour time frame is stronger than the 1 hour time frame. 1 hour is stronger than 30, 15, 5, all that, right? So if you're looking at the daily, it's stronger than the four. If you're looking at the four, it's stronger than the one, right? So with all this being said, the 1 hour was showing price could be bullish above this level. This is what you probably would have seen, something like this. Oh, made an indication, corrected, continuation back up here. Yeah, I see how you could see that. But if we're looking at overall what's going on, the market conditions, that's why I don't like telling people that, oh, just only trade the 1 hour. Flick through your time frame, see what's going on. Mainly stay on the higher time frames. I will always influence you guys to stay on the 4 hour, 1 hour time frame. If you need entries, go to 30, 15. 15 is really good when it comes to um, trading with gold for sure. When it comes to trading BTC, cryptos, stuff like this, and the reason why I like trading these things, I don't trade forex pairs because forex pairs, currencies is like it's more of a stable thing. I feel like currencies is more like stable than anything. So there could be little fluctuations, sometimes a lot, sometimes not too much. But the basic ones that most people trade, like Euro USD, G GBP, JPY, USD CAD, USD, what's the other one? JPY, GBP, USD. These things people trade a lot. But most of these, like, unless there's a crazy market shift or like there's a crazy economical thing, these are really honestly going to stay around the same prices sometimes. Unless it's like a crazy shift in economics. I can't spell. Eco, ec, economics, bro. I can't spell. Unless there's a crazy shift in economics, these are not really going to make too much of a shift. It's not like you're investing into these things. But when it comes to trading something like NASDAQ, people are investing. This is an investment, right? People are constantly investing into the NASDAQ market every single day. Same with SPY, same with Dow Jones. These are things people are investing to gold. People are investing into these things, cryptos. So these things are constantly having liquidity put into them, which means more liquidity, more movements, more volatility, right? All this is more volatility. Why do I trade NASDAQ? Why do I trade gold? Why do I trade cryptos? I just started trading cryptos because the gold hasn't really been, like, we've already been over this. So I don't trade Forex pairs because these are investments. Investments constantly have liquidity poured into them. And this will all driven off the hype and economy, right? All this is driven off of the economy and hype, right? Economy comes down to, and I'm talking about Trump too and stuff like that, right? So we're talking about that too. All this is moved off of that. This brings volume. Big part in price action trading, right? You got the market structure. You understand higher highs. You understand higher lows, lower highs, lower lows, uptrends, downtrends. You understand that. But price action, action. You need action. Price needs action. What is going to drive price? So what's going to put the gas on price? What is the pedal for price? It are these hypes, news releases, news, tweets from Trump. All these things are volume, volume. Always going to push price, volume, always. That's why it's always good to trade all these, NASDAQ, SPY, Dow Jones, gold. Trade these during New York session. USD. These are USD things. New York Stock Exchange is going to drive all of this money poured in because that is when the New York Stock Exchange is opening. That's where people go to invest their money, or it's the bank of trading, right? Pouring their money into banks. Banks open, New York session, 9:30, 9:30 a.m. EST. Chat GPT it for your time zone, right? We all got different time zones. Right now it's fucking 8 o'clock at night, but you're probably watching this video in the afternoon. I'm in Europe right now, right? These things need volume. So I'm gonna close this first segment out because I feel like I yapped long enough. I'm gonna close this first segment out at the fact that you need, for any of all of this to work, you need volume at the end of the day. Trading things where it has more movements will normally come down to investments. Are people investing their money into this? What Forex pairs, like I said, I feel like it's stable, and that's my take on it. I feel like it's a stable thing. There can be price movements based off of, certain economical events, but it really just comes down like to just the economical events and leading up to them. The news really draws Forex pairs a lot because that's where most of the volume comes from. But when it comes to things like NASDAQ, SPY, Dow Jones, gold, crypto, people are constantly putting their money into this every single day, every single day. People are also exchanging money every single day, but the the likelihoods of, you know, USD coming out of nowhere and being 10 times more than another currency, or 10 times more than or let me put it this way. The United States dollar, the chances of it being 10 times more um in a few days more than the euro is very unlikely. But the chances of crypto going from, like, look at the other day. Crypto went from $125,000 all the way to $110,000 in less than a few hours, or less than 2 days, 3 days. You see how fast that went? Just like that. So much money liquidated in the market. So much selling pressure. Same way with gold. That's why, gold is a little bit on my bad side right now because, once again, I feel like price is being driven too fast at a fast rate. Gold is something where people, you know, slowly invest their money into and get into it. And it's kind of like real estate. You don't just right off the gate buy 10 properties right off the gate. Not right off the gate. If you're a smart investor, if you're a smart person, you're not buying anything you see, everything you see just because it's there, just because you can. You don't buy things just because you can buy it. You buy things because it serves value. So the fact that people are driving gold price, because realistically, when price is going up, that means people are buying into it. Once again, it goes back to the clothing brands. The more demand it has, the more people hype it, or the more people think it is very valuable, the more value it can be given. BTC, for example, is not even a real physical asset, but people brung a value to it because it's only so much of it, right? So if people are still driving gold price up, sooner or later, there's going to be people are going to be like, dang, bro, like I got all this gold, right? And then it's going to lose its value. So it's very risky trading price at a time where you don't know if people are going to buy more or buy less. Sell, sell more, sell less. You never know. But as traders, we can make money both ways. So everything comes back down to market decision. I hope you guys enjoyed the video. And once again, I hope you learned something from this.